From 1833 to 1933, the price of gold in the United States stayed almost unchanged, around $20.67 per ounce. This century of stability was possible because the US dollar was tied to gold under the gold standard. Inflation was low, money was backed by real gold, and prices barely moved. Even though gold prices stayed fixed at $20.67 per ounce, the U.S. economy kept growing. Industrial production expanded, cities grew, and technology transformed everyday life. The gold standard kept inflation low, but it also limited how fast the money supply could grow. In 1896, William Jennings Bryan's Cross of Gold speech challenged the gold standard, a fierce debate over money, power, and the future of the U.S. economy. In 1900, the Gold Standard Act officially tied the U.S. dollar to gold, $20.67 per ounce. It marked the era of stability before everything changed. During World War I, the U.S. restricted gold exports, a warning sign that the gold standard wasn't as solid as it seemed. In 1929, the U.S. stock market crashed. Banks collapsed, millions lost their savings, and panic spread everywhere. People rushed to withdraw gold, draining the system and deepening the crisis. In 1933, President Franklin D. Roosevelt changed everything. He ordered all Americans to turn in their gold and ended the gold standard for U.S. citizens. Soon after, the official price of gold jumped from $20.67 to $35 per ounce, instantly devaluing the dollar. It was one of the most dramatic shifts in U.S. financial history, the moment when gold began to outsmart the dollar. By the late 1930s, gold prices had stopped rising. After Roosevelt set the official price at $35 per ounce, it stayed fixed for decades. The U.S. returned to a controlled gold standard, stable, but no longer truly free. By the late 1960s, the gold standard was under serious pressure. The U.S. was spending heavily on the Vietnam War and social programs, printing more dollars than it had gold to back them. As confidence in the dollar fell, investors and foreign governments started converting their dollars into gold. In 1968, the crisis reached its peak. The London Gold Pool, a group of 8 central banks led by the US and the UK, could no longer keep gold at $35 per ounce. On March 15, 1968, the gold market in London was forced to close. When it reopened, a new system appeared, a two-tier market, one with official prices for central banks and another with free market prices for everyone else. By 1970, the US could no longer defend the dollar with its gold reserves. Foreign countries were exchanging massive amounts of dollars for gold, draining America's vaults. On August 15, 1971, President Richard Nixon announced the end of the dollar's convertibility into gold, the famous Nixon shock. The gold standard was officially over, and the era of free-floating currencies began. From that moment, gold was finally set free, and its price began to soar. In 1980, gold reached its first all-time high, $850 per ounce. Soaring inflation, oil shocks, and global turmoil pushed investors to abandon paper money and rush into gold. But soon after, the U.S. Federal Reserve, led by Paul Volcker, raised interest rates to fight inflation. Confidence in the dollar returned, and gold entered a long decline that lasted nearly 20 years. This was the end of the 1970s gold boom, and the start of a new financial era. By 2005, gold prices started to rise sharply again. The dollar was weakening, oil prices were climbing, and investors feared growing global debt. Then came the 2008 financial crisis, which sent gold over $1,000 per ounce for the first time in history. It was the beginning of a new bull run that would peak in 2011. In 2011, gold reached its all-time high, nearly $1,900 per ounce. It was the aftermath of the global financial crisis and the European debt crisis. People no longer trusted banks or currencies. They trusted gold. After peaking in 2011, gold entered a long pause. From 2012 to 2018, prices stayed almost flat. The U.S. economy was recovering, and the dollar grew stronger. Investors turned to stocks, not gold. It was a quiet time for the metal that once ruled the markets. Starting in 2018, gold began to rise again. Trade tensions, political uncertainty, and slowing growth pushed investors back to safety. Then came 2020, the pandemic, and prices exploded. Gold once again proved to be the ultimate refuge in times of crisis. In October 2025, gold prices broke above $4,000 per ounce, a historic record. Global uncertainty, high inflation, and growing geopolitical tensions pushed investors towards safe assets. Once again, gold proved its timeless role as the ultimate store of value.